Elon Musk going at it with Peter Navarro over Trump's trade policy. And look, I understand that a lot of you are not looking to me to be a economist here, but I do think that this is interesting. Elon called Peter Navarro Peter Retardo, and also said that he was dumber than a bag of bricks, something along those lines, and a moron. Caroline Levitt, when asked about this, said, boys will be boys. This is what it's like to have a large variety of opinions. But to me, what's interesting about these two perspectives is essentially there are two arguments which don't necessarily correspond for Donald Trump when it comes to trade policy. Argument one is what I would call the Elon argument, and that is, let's eliminate all tariffs all over the world. And Trump has said that he is in favor of this. And so it would mean instead of there being a tariff, for instance, to protect Canadian dairy, milk in Canada, that would go away and everybody would compete evenly. You could buy American milk in Canada, right? It would mean that there are no trade costs. So it would be like the whole world is basically like the United States. Interstate commerce, there is by and large no cost if you are producing something in California and you're shipping it, let's say, to Georgia. Now, I understand there's different costs, there's different tax rates, all those different things, but you don't have to pay to cross state lines in the United States. It's not like Idaho can put a tariff on a product that's coming from Texas or vice versa. That would effectively mean zero tariffs around the world. That is the ultimate free trade policy. And there is part of Trump's trade policy that seems to be predicated on the idea tariffs are bad, we should have no tariffs at all, okay? I think that is going to be the result for some countries. That is one aspect of Trump's trade policy that he has been in favor of. And eliminating tariffs, to me, is actually a really good idea overall. Allow competition to be freer around the world and don't allow protectionist trade mechanisms to put into place. That is when free trade is fair, okay? And that's the Elon Musk side of the Trump argument. The other side, I would say, more militant, actually favors tariffs, and that's Peter Navarro. And what Peter Navarro is saying is China's cheating. They are eating our lunch when it comes to their trade policy. And in order to have free and fair trade, we actually have to have tariffs put in place to deal with the fact that China is hollowing out American manufacturing. And they're also cheating on the tariff world because they are using Vietnam and Cambodia as essentially satellite Chinese factories. And they're doing the same thing with Mexico to avoid playing on a free and fair playing field. And so these are somewhat different perspectives. On the one hand, Trump says, hey, I want no tariffs at all. I want free and fair trade. On the other hand, he says we have to punish China for their policies by implementing tariffs, which I believe have now gone over 100%. And we'll see how China responds going forward. But to me, that is the inherent conflict or the inherent discord between the Trump trade policy is he is simultaneously in favor for some countries of no tariffs, and he also wants tariffs levied at a high level on other countries. And what I would say in general is, this is why I said buy S&P 500 index funds and just hold them. This is why I have said in general, and by the way, S&P 500 down a little bit now today as I'm talking to you. I just checked it. This is why I said that ultimately, to me, this is going to come down to the U.S. versus China trade battle. And there are a lot of other countries involved, but the solution for England and Australia and Japan is going to be different than the solution for China. And really, this is about the U.S. and China coming together at loggerheads. But I think you're seeing that dual policy perspective underlining the Trump trade policy being advocated by Musk and Navarro going at it head-to-head. Stock market. Like, everybody is fired up about the stock market. Suddenly, I saw where Jim Cramer's like, it's going to be the worst day in the history of the... Look, my advice to all of you is the same advice I have been giving forever, right? Buy dips. Go back and look at everything that I said during COVID. By the way, I was 100% right. You can go pull it back in 2020. I said it was an all-time buying opportunity. I had money on the sidelines. I put more in. I'm always going to be long United States stocks. And what I do with my money, I sold OutKick several years ago, got a lot of money, rolled it into S&P 500 index funds. By and large, I have about 10% of my money in individual stocks. Try to just be transparent with you, tell you exactly where I've got my money. I've got my money. These are the individual stocks that I own right now. And many of them I've owned for a long time. WWE turned into TKO, right? I told you forever ago, go buy WWE stock and hold it. I still own TKO. I own DraftKings. I've owned it for a long time. I own Flutter, which is the parent company of the FanDuel. I've owned it for a long time. I own Fox stock. I've owned it since I sold OutKick to Fox. I own stock in Rush Street Interactive. It's another sports gambling company, and I own stock in the Atlanta Braves. Okay, those are the individual stocks that I own. You say, okay, Clay, why do you own individual stocks? I think I understand sports media and gambling companies better than the average person does. And so I have about, 10% of my overall stocks. That's probably low. Maybe even a lower percentage than that, but around 10% of my total stock holdings in individual stocks. The other 90% of my money is in S&P 500 index funds. And so people out there are like, oh, I'm losing my mind. What am I going to do? The stock market right now is virtually the exact same price as it was last year at this time. Okay? On average, the stock market is going to return about 8 or 9% a year. That's on average, S&P 500. Okay? This is my lesson for all of you that I have learned. Okay? S&P 500 is going to return about 8 or 9% every year. Some years it's going to go up 30%. Other years going to go down 30%. If you buy, put it in a drawer, don't look at it for 10 years. Every 10 years, on average, based on the last 100 years, your money's going to double. So I am telling you guys to do, by and large, what I do, which is buy S&P 500 index funds, which outperform the average market-based investor, that is hedge funds, everything else, over time. The S&P 500 outperforms almost all of them, which is why I have my money there. And don't look at it. Don't worry about the price. I saw where Dave Portnoy's like, oh, don't look at the price. Look. And he's like, oh, that's bullshit. Like, everybody looks, okay. But I own right now 4 homes, okay? Just full transparency. I've got the house that I'm in right now, which I owe, I think, $500,000 on because I have a 2.5% mortgage, and I don't want to pay it off, even though I've got the cash to be able to do it, because a 2.5% mortgage is cheaper than I could ever buy. We are building a monster house, and by we, I mean my wife. It's like 20,000 square feet. It's a little bit closer to town, a little bit closer to the kids' school. I'm going to have like a 5,000 square foot studio as a part of that. It's going to be one of the coolest studios. I got a green room. I got to walk up. I'm going to be able to do unbelievable shows there. I think we're supposed to move into that house sometime around October. Bunch of athletes are going to be living by me. It's a 20 house with armed security. My wife wants armed security around us all the time because there's too many crazy people out there who evidently want to kill me. So we're going to have armed security all the time. Fabulous house. Probably will sell this one that I'm in now that we've been in for a decade. Okay. I don't know if I'll take a mortgage out on that house or not. It depends on what the current mortgage rates are. I've got a fully paid for 2,500 square foot place in Rosemary Beach, Florida, that I bought, I don't know, like 7 or 8 years ago. And I have will be a fully paid for home in Alice Beach, Florida, which is one back from the Gulf. I should have bought a Gulf front lot. Instead, I'm one back from the Gulf. Fabulous, sunny sunset views. That place is supposed to be done around July. I'll own it outright, okay? The reason why I bring up the fact that I have 4 houses is because I don't look at the price of any of my houses on a day-to-day basis. I'm confident that I've got good real estate holdings. I also own a lot of percentages of a lot of different commercial real estate buildings, including one that we sold down on Broadway a while back to Garth Brooks. Remember, I had a sports bar. We sold that. Garth Brooks bought it. We owned the land. We made a ton of money as an investment group on that, right? I think we bought it for $8 million and sold it for $50 million. You can go look up that. Took an $8 million purchase and then sold it for $50 million a few years later. Broadway has been an incredible moneymaker. I saw today where the prices have continued to go up, unbelievable rates. My point on that is when you buy real estate, you trust that you are buying a good asset, and then you don't worry about the day-to-day price of it. And so I'm telling you how to really build wealth. It's buy index funds. If you're going to invest in the stock market, put them off to the side. People say, oh, well, you talked about the fact that the stock market was bad under Biden. Yeah, it was. For 2 years, the average return of stocks was down. I said this on Piers Morgan's show today, if on, what did I jot down? October 7th, 2026. If on October 7th, 2026, the stock market prices are below where they are right now in 18 months, and if inflation is up, I'll go on Piers Morgan's show and my radio show and this show in a clown outfit. I will dress up as a clown. I will come on with you with like a crazy clown makeup and a wig and the hair, and I'll say, you know what? I was wrong. I was wrong. It's 1 month until the 2026 elections at that point in time, and I will say I was wrong. I don't think I'm going to be wrong, but I'll put that on the line, right? My money is legitimately where my mouth is. I think what you are going to see is that the market has wildly overreacted to this situation. And I think by the time we get to probably summer, I think the market will be humming along. I think we'll have new trade agreements reached. And I think that the market will come roaring back. And I believe that people who held their water and or put more money into the stock market, much like I told you to do during COVID, when I said this is crazy, the stock market has wildly overreacted, I'm putting more money into the market. I'm putting more money into the market now. If you have money on the side, I think it's a good time to invest. If you don't, I think it's a good time to hold and just ride it out and recognize that unless you felt super poor last year at this time, you have basically the exact same amount of money in your investments right now as you did 1 year ago. Okay? And unless you were like on April 15th of last year, oh my goodness, I'm so poor, I have no money, I don't know how I'm going to live, you have the exact same money now if you've been in the market as you did then. And I think you're going to have more. Now, if you're one of those people out there that wants to like day trade or you want to try to time the market, I think what the data reflects is that you are going to fail. Because what happens most of the time, and listen to people way smarter than me about this, listen to Warren Buffett, what happens most of the time is people who engage in emotional reaction, they sell near the bottom, because they're looking at it and they're saying, oh my God, I should have sold 6 months ago. If I had sold 6 months ago, I'd have X more dollars. Or they buy at the absolute peak of the market because they keep waiting, they keep waiting. They're saying, oh my goodness, I should have bought. And then emotionally you get in. What you should do is dollar cost average. Buy all the time, And over time, you're going to make 9 or 10%. That's what or 8, 9, 10%. That's what I tell my kids. Every 10 years, your money should double in S&P 500 index funds. That's what I do. So to me, like, this is not a tough decision. I'm going to ride it out. I'm going to put more money in. I believe in American exceptionalism, and I think Donald Trump is going to eventually get better deals for the average American than exist right now. And if you doubt me, just look at all the stories about Trump. Trump recognizes something's wrong. He comes in, he tries to address it. That creates disruption because most politicians don't do anything. And then he ends up with us in a better spot than we would have been otherwise. This is what the whole history of Trump is. He does something, people wildly overreact. They're like, oh my goodness, our democracy is going to end. Oh my goodness, he doesn't believe in the Supreme Court. He's not. They tell you everything that is crazy. Trump behaves logically, rationally. You can criticize Trump for a lot. Do you really think the guy doesn't understand interest rates? Do you really think the guy doesn't understand negotiating leverage? Do you really think the guy doesn't understand basic economics? Try to build a building in New York City. Most people could never accomplish that. Okay? So I believe what's going to happen is 18 months from now, I think the stock market will be appreciably more than it is now. Nobody knows for sure. There have been decades. Go back and look at the 1970s when things didn't go well. And then there have been times, look at the 80s, the 90s, 2000s, look at how stock market prices took off. But 25 years ago, we had the dot-com implosion, right? Stock prices have skyrocketed on the hopes of AI increasing the efficiency of business in massive ways. Is it possible that AI is the new internet era, right? Everybody spent all this money saying the internet was going to change everything. It did, but the valuations got so out of control that it took years for the stocks to come back. Yeah, it's possible. I don't claim to have a crystal ball. What I can tell you is if you believe in history over the last 100 years or so, we're going to grow about 8 or 9%. And by the way, if you don't want to be long America, where are you going to be long? Are there other countries you would rather have your money in? I can't imagine any. So my position on this is it's not a very difficult call. I think you should hold S&P 500 funds, and over 10 years, you're going to double your money. And if you're old, you shouldn't be in the stock market. I mean, people out there are like, oh, I was planning on retiring. Like, why are you in the stock market? If you were going to retire, pull your money out of the stock market. When I am 70 years old, I don't think that I'm going to have as much money invested in the stock market as I do. I will have a lot of it pulled out. And let me say something else too. I mentioned homes. You're probably not looking at your housing value on a day-to-day basis. I'm also invested in a lot of private equity. Private equity is companies that have not yet gone public, often smaller, that have raised money. The most successful guy from my law school class, he now owns the Phoenix Suns. He's got a ton of different funds that I'm invested in. I'm invested in a bunch of real estate funds. I don't even know what the value of that is on a day-to-day basis. So a lot of wealthy people get access to private equity. We can't even see what the value is on a day-to-day basis of all that bucket of companies that we are invested in because there isn't a daily valuation on that. Now, I'm also invested in XAI, SpaceX, a lot of these other private companies through private funds. By and large, it's hard to see what the valuation of those companies is either. I'm buying them on the idea that eventually they're going to go public and there's going to be a payoff. But maybe I'm just rare in that I'm very comfortable having lots of assets that have an unquestionable value because what's rare is actually the public market where there is a minute-by-minute valuation of your investments. More of my money is in real estate and private equity than is in the public stock market. So I look at it and I say, like, certainly I have a much higher risk tolerance than the average person, and I would prefer that my public market dollars be higher. But any given snapshot of a daily valuation is as likely to be wrong as it is to be right. And if you own private real estate, your home or commercial real estate, you're not sitting around on a day-to-day basis like looking at this in any kind of way. And so anyway, my advice is hold S&P 500 index funds. If you're too emotional, don't look at the stock price. Don't look at your 401k, but every 6 months. Don't look at your 401k, but every year. And over time, I think you will be happy at the results in a way that you will not looking at day to day. So I think this is basic common sense. And anyone out there who sees otherwise is flat out wrong.